World Business Insights, where we go into more details behind the leading business headlines. The People's Bank of China announced today that it kept the loan prime rate LPR unchanged, with the 1 year at 3.45% and 5-year LPR at 3.95%. It was an unusual pullback in US stock markets in the first month of the second quarter, from what was looking like a relentless rally with 5 months of a decent run, suddenly followed by 3 straight poor weeks. Traders are now paying close attention and less confident that the current 5.5% drop in the S&P will not further deteriorate into correction, that is 10%. Or we could see a rebound with hopes on big technology firms releasing their Q1 earnings this week, possibly boosting sentiment. Tesla reports tomorrow, Facebook on Wednesday, Microsoft and Alphabet on Thursday. We also get Boeing and Airbus reporting earnings this week. On Saturday, the US House passed 4 bills now heading to the Senate to provide $95 billion of aid to Ukraine, Israel, and Taiwan, along with a measure to force TikTok parent company ByteDance to either sell the app or exit the US. And as the World Bank IMF meetings wrap up, the federal government of Nigeria on Saturday announced that it has qualified for processing a loan described as virtually a grant of $2.25 billion from the World Bank at 1% interest rate. We also look at challenges of Tesla and the electric vehicle and autonomous mobility market as the EV leader announced more price discounts to survive the demand weakness. And on the Israel-Iran front, the nervousness has not fully abated. Analysts are of the view that as long as Iran continues to send advanced weapons to militant proxies that threaten Israeli population centers, Israel will be compelled to pursue its campaign against Iran. As the war comes out of the shadows, the next development is anybody's guess. Brent crude earlier this morning under $87 per barrel. After months of bitter wrangling, the House of Representatives passed a bill in the US to appropriate $61 billion to help Ukraine defend itself against Russia. It also passed 3 other bills, one to help Israel, one to deter China from attacking Taiwan, and a mix of measures including forcing the sale of TikTok to a non-Chinese owner. All 4 bills, a combined foreign assistance package totaling $95 billion, are expected to pass the Senate within a few days. Tying the TikTok bill to a crucial aid package for Ukraine and Israel is perhaps an obvious way to ensure it goes quickly to Biden's table. Certainly it will go to the courts. China will stand in the way of the sale of the TikTok algorithm, and the valuation will be steep. Last week, Biden called for a 25% tariff on certain Chinese steel and aluminum products. This comes in addition to tariffs put in place by Trump on some products. Mr. Biden says he is investigating Chinese shipbuilding subsidies and is working with Mexico to block Chinese tariff evasion. And to encourage more in-country productions of chips, Biden unveils almost $20 billion for Intel to boost US chip production. Still on protectionism, this time in Europe, there is an increasing sensitivity to awarding defense contracts to companies that are not headquartered in the EU. This was as the EU states debate proposals from Brussels for a defense industrial strategy, which encourages prioritizing EU-based defense companies over non-EU suppliers. And as costs of doing business escalates with all the protectionism, the developed weapon producers are likely to get richer with the huge defense outlay, and the cost of war is passed increasingly to aggressors, of course, as defined by those writing the checks. Indeed, we could see more wealth and growth moving to developed economies, similar to the emergence of the US as an economic power after World War II. The global South have little choice in the new defense and trade protectionism, which WTO cannot question, but to revert to defend themselves with their own brand of protectionism. The result is, of course, more fragmentation, trade corridors, and higher costs, which feed into the stickiness of supply driven inflation. With more inshoring, nearshoring, and friendshoring, foreign direct investments are not just chasing yield but aligning to geopolitical corridors. The environment of higher costs and interest rates means returns are lower and the business case is tighter. Incentives are needed to be much more attractive than it used to be, say, a decade ago. Investors are also having a lot to deal with and will be less tolerant of toxic macroeconomic instability or an unfriendly climate to do business. Nervousness has not abated as the present dynamic of hostility stokes up the likelihood that open warfare between Israel and Iran will continue. Such a war could invariably draw in the United States, Iran's regional proxies, and perhaps even neighboring states. The global contest between democracy and autocracy, between a US-led international order that values human rights and freedoms and a world safe for dictatorship and predation, is moving to a higher gear. Some analysts argue that US policy regarding the wars in the Gaza Strip and Ukraine suggests that the US is selective in how it applies its rules, and with its own divisive domestic debates on things like reproductive rights playing now in an election year, it's unclear whether Biden will risk votes by backing Israel in an all-out war, and that could embolden Iran. The mood on geopolitical risk remains a dire red, and risk premium on oil prices can only inch up in the near term, even though so far prices have been quite stable, suggesting a significant premium is already priced in, and concerns over supply are balanced as US promises to put more oil in the market in the busy summer driving season. Meanwhile, petrol prices in the United States have started inching up again. Late Saturday, Tesla slashed the price of the driver assistance software that it calls FSD, or full self-driving, by a third to $8,000 in the US. It had been $12,000 before. Tesla has been cutting prices of all it can, everywhere it can. The EV slashed prices of its cars globally after its first quarter deliveries fell for the first time in nearly 4 years amid a glut of inventory. In China, Tesla's market share shrank to around 6.7% in the fourth quarter of 2023 from 10.5% in the first 3 months of the year. Tesla cars may be technologically loaded, and features like autonomous driverless capabilities are good to have, but regulators do not like them, and people may just not want them badly enough to pay what Tesla is asking when wallets are squeezed and costs of borrowing are high. Also, the environment of geopolitics and trade protectionism is complicating the global business model, and that is also impacting brands like Tesla. Other traditional car makers are also facing their own challenges. Volkswagen workers in Tennessee just voted to join the United Automobile Workers as unions continue to gain a foothold in the US automobile factory space, seeking better wages and benefits. As traditional vehicle makers step up their own EV investments amid all the headwinds, including higher costs, they argue that a unionized EV industry will put them at a disadvantage. Also, technological and mechanical progress is making cars last much longer. Models are shifting away from traditional multiple vehicle ownership in the new, more efficient mobility models. Again, more pressures likely to erode margins further for cars. Nigeria was often at the center stage at concluded World Bank IMF spring meetings ended as the strong duo of Nigeria's central bank governor and minister of finance made it clear that Nigeria was open for business, reforms are serious, and the handshake between the fiscal and monetary side is aligned to usher in a different era of progress. The contingent did not come back empty-handed. The federal government qualified for processing a loan, virtually a grant of $2.25 billion from the World Bank at just 1% interest rate. According to the Finance Minister, Wale Edun, the package approved by the Board of Directors of the World Bank offers a 40-year term with a 10-year moratorium and a nominal 1% rate. It was a positive outing for Nigeria in getting across its reform agenda. One hopes the Nigeria team also got the message that the global context has vastly changed. Every country is going to be on its toes in the coming years, and tepid growth suggests competition for investment will only intensify as nations use billions from tighter fiscal space to attract strategic industries. It will not be enough to catch up with where we should have been a decade ago. You have to envision how to transform to be relevant in the present digital age and gain your fair share in the global economic activity mix in a vastly different and much more competitive supply chain dynamic. On June 3rd, we get the first quarter capital importation report in Nigeria, where analysts will focus on the change in foreign direct investment. FDI has the best correlation with economic growth, which is why we look more at FDI. In Q4 2023, total capital importation into Nigeria stood at $1.09 billion, slightly higher than $1.06 billion recorded in Q4 2022, indicating an increase of 2.62%. But compared to the preceding quarter, capital importation rose by 67% from $655 million in Q3 2023. FDI imported in Q4 was just $184 million from $60 million in Q3 2024, more than tripled, but far less from where it needs to be. Just to make my point on the performance gap, South Africa recorded FDI inflows of $1.35 billion in Q3 2023, over 10 times what came into Nigeria in the same period. Other key data on Nigeria to watch: April Standard & Poor IBTC PMI comes out on May 2. April inflation also out on May the 15th. And still in Africa, South Africa's election holds on May 29 and could lead to sharing of power that dilutes the grip of the African National Congress in a nation that could do with better accountability. And some say this dilution could be a good thing. The Democratic Alliance, that's the party favored by business, is seen as getting about 24% of votes, and some have said an ANC-DA alliance cannot be ruled out. But things could be worse, given that former President Jacob Zuma has been allowed to contest the May 29 elections as the main candidate of his new organization, the Umkhonto weSizwe, that's MK party. And in Namibia yesterday, Portuguese oil company JLP Energia ended the first phase of exploration in the Mopani field off the coast of Namibia, estimating that it sees at least 10 billion barrels of oil. It's about 6 a.m. GMT, and if you look at Asian markets, looking pretty mixed. Sentiment attempts recovery after the risk aversion we saw last week with the geopolitical turmoil. Nikkei 225 is up 0.83%. Hang Seng, that's the Hong Kong index, up 1.95%. Shanghai Composite, the Chinese index, down 0.4%. Shenzhen Composite down 0.07%, while the South Korean Kospi is up 0.98%. Well, that's it from me on Global Business Insights this morning. This is Bode Oshosami. Please share, kindly follow on Facebook and LinkedIn, subscribe on YouTube and X. Thank you very much for watching and following. Bye-bye.